Ladies and gentlemen, Bitcoin is bumping its head against a serious hurdle at around the $96,000 level. That is the POC on the volume profile, meaning it is the area of most resistance on the Bitcoin chart that you can see on the screen right now. The most resistance we have faced for about 5 months, close to 6 months, sits at this level at 96,000, and we have been unable to break through that level as of current. On top of that, we've also seen a very bad weekly candle close, a rejection from a critical resistance zone on the weekly chart. That is not good to see. So with all of this said, does the saying sell in May and walk away, which has been used for decades in financial markets, hold any bearing of truth on the Bitcoin chart right now? That's what we'll be discussing in this video. So I know I've come into this introduction with quite a bearish tone, but I assure you I'm not bearish. I think Bitcoin looks better than it did a week ago, and I think we are still in a macro upwards trend. This video is a little nuanced in that regard, but I'll be focusing on the saying specifically, sell in May and walk away, because a lot of you guys seem to think it's true. 35% of you seem to think sell in May and walk away has some bearing in reality, and I'm actually going to debunk that saying today. Before we get into it today, guys, we have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses and you'll help out the channel. I appreciate that, guys. Let's get into the content. So Bitcoin for 5 consecutive months was consolidating and correcting actually on a local level within a bullish market pattern. It was a descending wedge formation, very similar to what we saw in 2024, which was a descending channel formation, basically a short-term downwards trend with bearish exhaustion that eventually reverses to the upside. We did see that reversal to the upside after a nice clean retest of our critical green support box right here, which in my view is basically holding up the bull market, as well as a retest of this yellow dashed line stemming backwards from August and also September 2024, forming a nice upwards trend for Bitcoin to hold on to, a very clear level that Bitcoin needs to hold based on the fact that we retested it right there. So from those two retests, those two bounces off those two support zones, we managed to find the momentum to shift to the upside. We broke above the wedge. We also broke above the neckline on the local level at 89,000. And on top of that, we managed to break back into our prior macro consolidation range, which stems backwards from these two white lines from prior cycles and cuts right across the price action. You can see that range formed there between these two white levels. We were bouncing between that range for many, many months here on Bitcoin. We finally broke down below it, and now we are back above it once more with support retests for downside. So it's good to see Bitcoin back in that prior range. It's good to see Bitcoin break that wedge to the upside, break that neckline. This also happened with a momentum shift on Bitcoin. The RSI broke out. You guys should know this by now. Same thing also occurred on the total cryptocurrency market cap, breaking above its wedge with a support retest on a relatively similar ascending line. This one's in blue. It's the same line basically that Bitcoin had. So overall, the market swung to the upside and it was great to see. But right now we have new hurdles ahead, and this is where we get into today's video topic. With that breakout, obviously we moved in an upwards direction. It's good, but we also have a new hurdle here, and probably one of the most major hurdles that we have on the Bitcoin chart right now that you can see on the screen visibly. It is the POC on the volume profile. Now, what is the volume profile? The volume profile, which you can see on the right-hand side of the screen in yellow and blue, is basically the same as the volume indicator, which you generally see on the bottom of the screen. But instead of measuring volume on specific candles, it's measuring historical volume in a price region. So when this volume profile spikes to the upside, like you can see right here where I've just outlined, that means we've seen a lot of buying and selling, a lot of exchanging of coins in that price region, historically speaking. And when you see more buying and selling, more exchanging of coins in a price region, that generally represents that price region of being a major resistance and support zone depending on where you are in relation to it. So right now we're below 96,000, meaning that $96,000 level is a major resistance zone. And you can see resistance retest right here and resistance retest in the last few days, rejecting from 96,000 as per prefer it being a major resistance zone. So in order for Bitcoin to be in a great position once more, we definitely need to go ahead and flip that level for support. And then instead of having a major spike in the volume profile as resistance, we will have it as support, and it will lay the groundwork for Bitcoin to aggressively attack all-time highs and really kick off the next leg of the bull market. But obviously, as of right now, as we said, we are rejecting from that level. And that's not that great. That's not that good to see. And on top of that rejection from 96,000, we are also seeing a pretty bad weekly chart forming here. Now, again, it's way better than it was 2 weeks ago, but it's not very reassuring to see if we go to logarithmic. A rejection from a horizontal level that formed the basis of support from the prior macro range. You can see a clear closing right on top of that horizontal level right here, which is, potentially is marking an area of resistance. And obviously that in compact with the in conjunction, I should say, with the volume profile level at 96,000, really does make a case for Bitcoin finding strong resistance here through which it could see a correction. Now, that correction could very well be healthy. We could see a correction, for example, back to 88,000, which would be very, very healthy. That'd be flipping our prior neckline. But the point is, we could see a short-term pullback here. In my view, as long as it remains above this yellow dashed line, we're completely fine. We've got plenty of breathing room. But with the prospect of a short-term pullback, we have to ask the question, is the saying, sell in May and walk away, is that saying relevant in this month ahead? Because a lot of people are saying that right now, and every single time the end of April rolls around, people say, sell in May and walk away, sell in May and walk away. And basically it's referring to a traditional market trend, which essentially has, proven to some extent, especially in, if you ignore the last decade, let's say, May has generally been a very bearish month for markets in general. Now, that is actually not true at all in the cryptocurrency market. In fact, if we go to the historical returns in crypto, and this is where I clear up this massive misconception, we can see very clearly here that out of all the Mays we've seen, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We've seen 12 May months on Bitcoin, historically speaking. Out of all of them, 1, 2, 3, 4, 5, 6 of them have been green, which means May is not red at all. May is actually 50-50. It's a coin toss, right? So there's no saying in cryptocurrency that applies sell in May and walk away. It doesn't make any sense to say that in regards to crypto, because historically speaking, Mays have been 50% green and 50% red. There's no trend here that Mays are particularly negative. If anything, Mays are actually leaning slightly bullish, because although only 50% of them have been green, you might think, it's 50-50. But the reality is the average return in May is 8%, a positive 8% return. So if anything, Mays are actually slightly more bullish than bearish. So the saying sell in May and walk away just simply doesn't make sense, and it's so easy to debunk it. All you need to do is look at the data. The real bearish month in crypto is probably September and maybe August. Those are really bearish months that generally have leaned red historically. May is completely, it's on the sidelines, right? It's completely in the middle of the pack. Now, if we want to take the saying more broadly, the saying sell in May and walk away, take it more broadly, we can look at Q2, right, quarter 2 performances, but even that, quarter 2 performances are actually one of the most bullish quarters we have. Quarter 1 is where we really see negativity. Quarter 2 is fine. It's completely fine. In fact, we've seen 1, 2, 3, 4, 5, 6, 7, 8 green quarters and only 6 red quarters. So the saying sell in May and walk away just has no bearing of truth in the cryptocurrency market. It may be true in traditional markets, but obviously the correlation between traditional markets and crypto is not a perfect correlation. It's about a 70% correlation. So you do see Bitcoin deviate from that. And you also, we're in a bullish cycle year. So if anything, this May is likely to be more bullish than bearish, all context ignored. Now, with the context, we do have Bitcoin on the precipice of resistance here, and we do have Bitcoin showing some weakness into this resistance, pretty pushing us towards what could be a short-term correction. So if we do see a red May, it wouldn't completely shock me. Although I don't expect a correction to last too long. I do actually expect us to be higher this time next month than we are now, even if we do see a correction, just due to the fact that we did see a market shift to the upside. But overall, if we do end up seeing a red May, it shouldn't really be the result of some saying that people say, because that saying has no bearing in truth in traditional markets anymore. In the last decade, it's been pretty much debunked, and it certainly has no bearing of truth in cryptocurrency. So what are we talking about here today? What's the conclusion? Well, the conclusion is Bitcoin has broken upwards. We've known that for a few days now, but it is currently facing some major resistance in the $96,000 region, through which it could see a short-term pullback from. That pullback will be healthy as long as we remain above something like, let's say, 75,000 US dollars. Ideally, we don't go below 88,000. 88,000 would be a great place to find a low, or even a little bit higher up here at 91, which would be the bottom of the prior macro range. But a short-term correction is not something that you should be particularly scared of right now. It would be a normal correction after a move to the upside. Ideally, obviously, Bitcoin just pumps further, but that is, obviously ideal. Don't be scared away from the market based on sayings. At the end of the day, people are just saying it. It's not based on any truth, and we've just proved that very quickly. So thank you for watching, guys. I hope you enjoyed the video. Now, if you want to ask me a question about the market, I've gone in my YouTube community posts page, which you can find on my homepage, and just go to that post section, and you can drop a comment. Anything you want to ask me about the market, whether it be Bitcoin, altcoins, traditional markets, macroeconomy, I will answer it in my video tomorrow. So now's your last chance. Chuck a question down there. I've got 14 questions and you can get yours answered. We have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses, and you'll help out the channel. I appreciate that, guys. Let's get into the content.